Rhind, founder and CEO of GraniteShares, joins us now. So, let's start with AI. I think we may know the play there, but I guess, not only what names you like, but how you guys have thought about that theme and how quickly it really came on for investors.
Yeah, no, absolutely. I mean, by far and away the trade of the year in terms of AI. I think the difference being that people really, believe that this is something that is real this time, as opposed to a short-term fad. So Nvidia has been front and center of every investor's mind. The stock performance has been unbelievable year to date. And we've been able to sort of participate in that, if you will, with our Nvidia ETF. So we have a leveraged single stock play on Nvidia for people to get exposure. And that's been a good way to play it.
So how much, I guess, two parts. How much inflows have you seen, or what's the inflows been like to that product specifically? But then also, how do you guys think about where that fits into a portfolio, and like how someone might want to use that name if they see that option on the menu?
Yeah, so we're I guess nearly 200 million in terms of inflows year to date in NVDA, which is the Nvidia stock. And I think there's a number of different ways that people use it. I mean, clearly one of the problems with AI is it's this kind of amorphous concept where a lot of people say, hey, I want to play AI, but how do I do it? And so when they go to the broad diversified ETF market, they might find ETFs, even ETFs that labeled AI. The challenge is inside it, you get a bunch of stocks that really sometimes can have very little to do with it. So that's where something like a very concentrated exposure like Nvidia itself, or the leveraged single stock version, has been so popular.
Well, how are you looking at the valuation aspect of Nvidia? The other stock that you like within this space that has been largely tied to the AI rally is Meta. There's been some concern out there just about the lofty valuations that we are seeing from companies like that. Why is that not giving you pause?
I think that, as I sort of said at the beginning, I think that the difference for me is that I think AI is real. It's not just a short-term hype where people got in and in 6 months' time we'll have forgotten all about it.
Do you think we will, though, see a bit of a pullback here, at least in the short term?
It's possible. I think that if you look at every analyst on the street, they're kind of overwhelmingly bullish on Nvidia, with some people pricing Nvidia $100+ higher than where the stock trades today. There's no doubt that there's been multiple expansion from a lot of these big companies from where we were last year in the first half of this year, and that will have to be backed up by fundamentals in the next 6 months as we get towards the end of the year. But I think a company like that is just so well positioned, and in a market where everyone's out there digging for gold, a company like Nvidia is providing the shovels.
I guess when you raise your guidance by 50%, you get away with some things when it comes to valuation. Let's talk about a couple of names you're a little more cautious on, and one that stands out to me is Home Depot, particularly since we see demand for new homes or home builders are very excited about their prospects. But when it comes to existing homes, maybe DIY, what kind of, in your view, is some of the caution around that story?
I think it's kind of what you just said, Myles, is that we've got a real issue with the housing market at the moment, and the housing market is just largely ground to a halt. Not sale of new homes, because new homes are new supply coming onto the market. Home builders that have supply are selling homes, but for people that locked in mortgage rates that were a lot lower than where the market is trading today, those people aren't moving. And so the big reshuffle and the fever that we saw in Home Depot and other stocks during the pandemic has definitely come down. And I think that the trouble is that right now, we've got to see the housing market start to loosen up, but I just don't see that happening anytime soon, at least until we reverse course on rates.
Well, the other pick that you're advising investors to stay away from is Exxon. Oil still below $80 a barrel. We've heard from a couple of strategists that they do think energy is a great buy right now heading into the second half of the year, that we will see that global demand picture improve a bit. Why are you taking the other side of that bet? Because
I think people have to remember that before the last couple of years, in other words, the bottom of the pandemic, Exxon and a number of big oil companies didn't go anywhere for 10 years. The reason for that was that oil effectively, or oil companies, there was increasing pressure from environmental concerns and others about the future of these companies, and obviously carbonization more broadly. The stock price has done incredibly well on the back of what we saw in the pandemic, brought forward a huge amount of growth. But the question really is, just like the tech stocks before the pandemic, the question is what came up or what went up massively over the last couple of years, I think now has got room to come down.
Yeah, and it seems like in an environment where you can write a 10-year secular thesis for a stock again, which you couldn't do for a little while. Oil doesn't exactly get people super fired up about the long-term
It's not a growth
prospects.
story
Yeah.
at the end of the day, and it doesn't have to be to make it attractive. I think Exxon will go back to what it was, which is a company that has fantastic cash flows and can pay a good dividend. Mm-hmm. But it's not going to be a stock that doubles or triples like it did over the last few years.
And Will, quickly before we let you go, I want to ask about gold generally, and just kind of thinking about portfolio positioning right now. And I think a lot of people who maybe weren't even super overweight tech now because of the rally, all of a sudden have a ton of tech in their portfolio, might be thinking, I would like to get rid of some of this and buy something else. How are you thinking about gold at this point?
Well, I think gold is in a good position at the moment, and the key word is the dollar. That we're kind of at the metaphorical top of the mountain, if you will, with interest rates as opposed to the bottom or halfway up. And so gold prices hanging in here quite nicely because we've seen the dollar weaken from the peak last year. And so just like with a lot of these top tech companies, a tailwind that's going to come into the market is those that have big international earnings that got hampered last year because of the dollar strength will now see that as a tailwind with a weaker dollar. And it's the same for me with the gold market.
Great. Will Rhind, founder, CEO at GraniteShares, thanks so much for stopping by. Have a great weekend.
Thank you.